Welcome back to Smart Stock Sam. There's big news on this stock recently, and market is reacting as expected. But let's slow down and focus on the facts and see how they are shaping the narrative. I'll cover what's real, what's noise, and what it could mean next. For quick updates like this, subscribe and tap the bell to catch every market move on time. Alright, here we go.
DVLT is up 20%, but the real story is what they're hiding from you. You clicked on this video because you saw that massive price spike, and you want to know if this rally is the real deal. Let me be blunt, it's not. That 20% gain is a carefully engineered illusion, a brilliant distraction from a company that is quietly self-destructing. While everyone is chasing the hype, they're missing the two facts that truly matter: a catastrophic 1,000% share dilution and a company with less than 30 days of cash left in the bank. You're seeing the tip of the iceberg. Now I'm going to show you what's hidden underneath and reveal the mechanics of this trap. The market is reacting to a fresh coat of paint. The company, formerly Summit Wireless, has rebranded itself as Datavault AI, hoping to catch a ride on the hype wave around its new partner, IBM WatsonX. This facelift successfully pushed the price to nearly 90 cents. But here's where we separate the signal from the noise. While the price was going up, the trading volume actually plummeted by 33%. In the world of professional trading, that's one of the biggest red flags you can get. It screams a total lack of conviction from the smart money. The big players' lack of interest in this new AI story isn't explained by the price chart. The truth is buried deep in the company's filings, and frankly, it's shocking. This is where the story turns brutal. While retail investors were chasing a 20% pop, the company was quietly flooding the market with new shares. Think of it like this: you own one slice of an 8-slice pizza. But then the company, without making the pizza any bigger, suddenly cuts it into 80 slices. Your piece just became almost worthless. Over the last year, DVLT has increased its shares outstanding from 52 million to over 581 million. That is a 1,016% expansion. This company isn't building value. It's using its stock as a personal ATM to stay alive, and it's destroying shareholder value to do it. Okay, so they're printing shares like there's no tomorrow. But maybe it's for a good reason, right? Maybe they're funding some kind of explosive, game-changing growth? Let's compare the story they're selling to the reality of their bank account. Management is painting a beautiful picture, a $2 billion revenue target for 2027. It's a story designed to make you dream of a multi-billion-dollar valuation. Now, for a reality check. Their current revenue is a mere $2.9 million. To hit their own target, they need to grow by 70,000%. And they have to do it while their operating margin is a staggering negative 696%. They aren't just losing money on every sale, they are hemorrhaging cash with absolutely no sign of profitability. If you had a plan that you knew was a sure thing, would you be selling your own stake in it? Of course not. So let's ask a simple question. What are the insiders at DVLT doing with their shares? Always follow the smart money. And at Datavault AI, the smart money is sprinting for the exits. Silex Holding Company, a major 10% owner, just dumped 15.9 million shares around the 72-cent mark, far below the hype-fueled price targets. In total, insiders have cashed out $32.4 million worth of stock, while the ownership by actual institutions has dwindled to a tiny 0.66%. They are getting out while the getting is good. So, the insiders are selling and the fundamentals are a disaster. How is the stock price still standing? This is where it gets clever. They're using a classic magician's trick, distraction. When the facts aren't on your side, you create a spectacle. Enter the Dream Bowl meme coin. The company is trying to rebrand as a meme stock, handing out digital trinkets that they openly admit may have no value and are not shares. At the same time, they're issuing warrants, the option to buy a stock later, with a strike price of $5. That is a 457% premium to today's price. It's a pure curiosity trap, designed to lure in speculators while the core business sinks. All of these games, all this distraction, it only works if you have time. But for Datavault AI, the clock is ticking down to zero with terrifying speed. It's the bull story versus the bear reality. The bulls will point to a flimsy $4 price target and the IBM name drop. But the bare reality is ice cold. DVLT has a cash runway of just 0.72 months. Let me be clear, that is less than 30 days until the company is out of money. This isn't an investment with risk, with a negative 100% return on equity and insane volatility. It's a gamble on a company that's on life support. So, after uncovering all of this, we come to the final, most important question. What is the verdict on DVLT? That 20% gain that felt so exciting? It was a mirage. It was a volatility spike on phantom volume designed to hide the real story, the 1000% dilution, the insider exodus, and a company weeks away from insolvency. Unless Datavault AI can pull a miracle out of thin air and generate cash in the next 3 weeks, that $4 analyst target is pure fantasy. What you're looking at is a classic liquidity trap, and you do not want to be the one left holding the bag when the music stops. What do you think about the current surge of DVLT and how do you perceive it? Do you agree or disagree? Leave your thoughts in the comments.
All right, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.